Well, howdy, folks. It's Mike again, and we are doing another one of these, hopefully short Webby Rambles on. I'm calling them the Back to the Beginning or Back to the Basics series, where we take a single concept and we just kind of hammer that in relatively quickly, and there's minimal fluff, there's no stories, there's, well, unless there has to be, and there's no music stuff at the end or no like me walking you through my YouTube channel. It's just like, let's just get into this type of stuff. And I really want people to have a really strong foundation in all of the basics. So this is not for newbies, and this is for newbies and super veterans, because there's going to be something for everyone in there. So don't think if you've been trading for a few decades that this series isn't for you. It's for everyone. I'll just tell you, Bill O'Neill, he would have the PMs just go back to the basics, and we would just go over very, very key things like cutting our losses and what does a base look like that's under accumulation versus not, and really, really core principles. And he got that from John Wooden, who is somebody he looked up to, a famous basketball coach who would every year, as the story goes, would teach his players how to tie their shoes the right way and put on their socks the right way. So then in the middle of a key game that they didn't have a shoelace that got untied or had some sort of foot problem. And that's how Bill would tell us, at least as he was going over these things where like, we know this stuff, we teach this stuff to people. Why are you going through this? But it was really just making sure you have the foundations down solid. So it's good for me to review these things as well, because you just never know what you pick up whenever you go through something. Never think that you know everything, because you don't. No one does. So we are going to go over some 3 weeks tight this time. And this is one of the core things of, if you've missed a stock out of a base breakout, is one of the key places to get it. You can buy it off of a moving average, an upside reversal, or you can buy it off of 3 weeks tight. Those are kind of your base cases. There's other places too. We'll talk about those in future episodes, but this is a way to get into a stock that's more advanced. If you're brand new, you probably don't want to use this to start a position, but you would want to use this to pyramid into a position that you already have a decent gain on. It's also something that you want to interpret to tell you that the stock is under accumulation. And that's a separate topic than buying a 3 weeks tight. So we might do a separate one on that if I feel like we have time to get into how to use them in bases. I will, but I'm really trying to make this as short and to the point as possible. So this one is going to be primarily focused on the 3 weeks tight when it's up and out of the normal base. So let me just share Market Surge with you. And but before we do that, I'm just going to kind of walk through just the basics of what 3 weeks tight, what it is, and how I was able to codify it so we have it in Market Surge. So what Bill would do is, and he did this in his book. You have How to Make Money in Stocks, and in the front pages, 100 pages or so, he marks up all these model book stocks, and that's how he would learn and how he taught me to learn. And you just study stocks that have done well in the past and look for similarities. And one of the things that he would do is he would mark up all the charts, put these little circles around things, and he would call that 3 weeks tight. And so when I was studying his personal model books, where he has all this marked up that was only for him, he was never going to give it to anyone else, they were all over the place. And so I really asked him, I'm like, okay, what is the exact measurement for this? And he didn't have one. So I figured it out. I just reverse engineered, just looking at tons and tons of his charts of what worked in most cases. It's not foolproof. There's room for improvement. And hopefully if I get time, I will do that over the coming years. But this is pretty much gets 98% of them, give or take, of what he would be after. And it's your focus on the closing price only, not the spread, not the open, high, low, only the close for 3 or more weeks. So this isn't for monthlies. It's not for dailies. Not saying that you couldn't use it for those, but the Original way is for weekly charts. So 3 weeks in a row where at the end of the week you're almost unchanged. So what is almost unchanged? And I wasn't sure. So I backed into it and found that it was really a 1.5% band, meaning if on the first week it closed at $100, you just add $1.50 onto that, or 1.5%, and then subtract 1.5%. And if you had three, or so that would be what, 101.50 down to 98.50, right? So if you had closing values there for the next 2 weeks within that band, then it would be 3 weeks tight. If you had a fourth week in there that was within that band, then it would be 4 weeks tight, and so on, 5 weeks tight. And it can go on a long time. Now, obviously, this was back in the day before I started using average true range, which would have been the better way to do it. So if I do this going forward, I'm going to use the average true range, which will help make it more relevant. But for now, we're going to stick with what we have and what we have programmed in Market Surge. And it's something that when I was developing the Market Surge's pattern rec, which took me a decade plus of nights and weekends of working on that, because it was in addition to what I was normally doing. It was just a side fun project that I wanted all these bells and whistles, and the 3 weeks tight was something that I wanted in there. Now, originally when I built it, I circled them the way Bill did it on his charts. And when I did that, oh my God, it looked terrible. It was like this noise all over the chart. So I tried all these different ways. And the best way to do it where you could see it, but it wasn't intrusive, was just shading the area around those 3 weeks, 3 or more weeks. So let's show you Market Surge, show you what it looks like, and then walk into, more importantly, how to interpret it and what to do with it. So let's share Market Surge. And all right, we've got it up here. And let's just go to, well, this was one I was looking at earlier, just for an example. So you see in here this blue shaded area where it is, let's see, just going to zoom in here a little bit. So this blue shaded area, if you hover over it, it'll say tight area and then the length, 3 weeks. And over here was kind of hard because you get the pattern rec that is popping up in there. So it's can be kind of temperamental when it's inside the base. But here it is 3 weeks tight in there. And this one looks like 1, 2, 3, 4, 5 weeks tight in there. But the flat base info is dominating that, so you can't see it. But anyways, it's shaded there blue, and it's telling you that each one of those was almost unchanged. And you can just verify that. With this week was up 0.4%. Next week it was down 0.8%. So clearly within that 1.5% band of the closing of this. So again, if you're not clear, this is week 1, and your closing price was 623 and change. So that means you add 1.5% from the 623 and change, and you subtract 1.5% from that. And if you get 2 more weeks, which we did, the close within that band, it's considered 3 weeks tight. So what do you do with that? And this is an older chart. Let me just unzoom this and go back to the current day. So here it is on the current day, and this is the one that we were looking at over there. So what it's telling you is it was tight in there, and then what do you do with that? Well, you use it as a place to buy. And that is well, that's a separate topic. We'll get into that in a second. You can see that you have 3 weeks tight over here as well, and it was just breaking out from there. So let me just first show you where you find it, and then we'll get into the nitty gritty of what exactly do you do with it. So there's a few places to find it. I'm going to show you the easiest. We're just going to go to our list panel, and we go down in here under reports, and let's start at the beginning. Okay, we go to reports, go to growth 250. one of my other inventions, and I have a Webby Rambles on that. Then the pattern rec, which I have a Webby Rambles on that. You should watch that if you're curious. Then you go down into these sub lists, and this one is tight areas, and that's the same thing as 3 weeks tight. So this is telling you of the stocks that are currently on the growth 250, which of them have 3 weeks or more tight. And it's these 11. And so let's just play through that real quickly. Just bring this down a little bit. And again, this only shows up on the weekly chart, not on the monthly or the daily. So space bar to the next one. So it's 3 weeks tight in here on Corning. Maybe that's a good one to go over. 3 weeks tight in this one. And this one, that doesn't look as classic. Right there on the APH. Right here on the Charles Schwab. Oh, that's a good one. That looks interesting because it's also coinciding with your 10-week. So that one looks like a buyout. Okay, so let's go to that Corning one because that was kind of a classic one, and that was that's a whole topic for another day. Bill's 2000 Corning trade, but I'm not going to go off on that tangent. Look at me. Proud of myself. So here's the 3 weeks tight. So let's look at this. We've got the first week, 65.77. So it's telling you that for the next 2 weeks, it has to close 1.5% above that or 1.5% below that. So the next week it does, and the next week it does. So it's showing you that it's 3 weeks tight. Now, it's debatable whether the weekly bars can be wild or not. Now, if you look in Bill's book on page, I was looking it up earlier because he only has one paragraph on it. On page 117 of the orange edition, he has one paragraph talking about 3 weeks tight. And in there, he makes the comment of if the base pattern has wide spreads between the weeks, high and low points every week, and it's been constantly in the market's eye and frequently will not succeed when it breaks out. Basically saying that if your spreads are wide, that it's bad. But when the two of us worked on this together, and we did a lot of work on 2 weeks tight, 3 weeks tight, specifically in the base, which is not what we're talking about today. So that would be like in the base over here, in the base over here, in the base over here. It's a separate big topic, and the more I think about it, we just can't cover it in a short episode. That would have to be a full-length episode. But we're just going to talk about kind of our classic position, which is up here. So he was saying that in the book, he's saying that if you had wide spreads, so let's say like price bar was way up here on this week, and it was way over here this next week. This is obviously too extreme, but in like this week, that is bad, even if they were closing unchanged or almost unchanged within that 1.5% band. Well, that's what he said in the book, but that's not what he told me. He specifically told me that doesn't matter, that, but he went back and forth on that, like he did with a lot of things, like we all do. And so I just look at it as when he goes back and forth on something, it just tells me, you know what, I need to use my own mind and look at enough examples. And I've looked at enough where I think it's better to look the way this one looks, where it's classic and tight, because the nature of your price discovery of the price going all over the place is not there. It's truly, the concept is that it's under accumulation because it's moved up, especially in this case, it's moved up from this range all the way up here, 20% or more. And now it's digesting that. So it's kind of at an equilibrium level. So the less activity there is, the more it's truly under accumulation. But as I've said, he did say specifically to me that you can have those wide spreads, and as long as it's still almost unchanged, that's still under accumulation. But we're going to lean more on the traditional one, which is this one here. So now the thing is, what do you do with that? I look at the daily to look for clues of where to buy that. And so let's go over to the daily chart. Now, some people would say, just let's go back to the weekly. Oh, just use the highest point that it made, and then within 5% of that. That's okay. Um, saying that you can buy it within 5% of that, it's not how I like to do things, but you can do it that way. I like to look at the weekly and say, okay, it's 3 weeks tight, so it's under accumulation. Now let me look at the daily and see if there's any entry points in there that work for me in that 3 weeks tight. So let's go back to the weekly. It started on 8/8, the week of 8/8. So we'll go over here and see where is 8/8. 8/8 is this week, that Friday. So it was advancing here. This was that Monday. And so, but here was the point to over here. That's 3 weeks. So on this one, it makes it very easy for you, or at least for me, to look and say, where's the entry? Well, for me, I love upside reversals. In fact, they were my favorite entry point, and we'll do a separate one on those. But this is a classic upside reversal where you shake out below recent lows and you close near your highs, and still getting over being sick. Sorry, guys. So with this, if I buy it on this day, I'm going to use that low as my stop. And if it goes below that, well, yeah, I was probably wrong. I need to back out of that. So that's why I like the upside reversals. But so I would use this as my first entry. And then if you can find any area of resistance in there, even like this little thing there, not much of something, but you can start buying it on this day and or adding to it. And then certainly as it's going over this area of resistance, adding to it there or buying it there. So again, you're looking at the weekly chart to say, hey, this thing is under accumulation. It's closing almost unchanged for 3 or more weeks. This can happen for 4 weeks, 5 weeks, and so on. There's really no limit, but it's not normal for something to be that tight for 7, 8 weeks. I guess it's possible, but it would have to be a very low volatility stock. But anyways, that's where you're then saying, okay, how do I buy it? And you look at the daily chart for your clues. Let's zoom out a little bit and let's look at that list again and see. There was another one here, this ARGX, because this one had one historically. And again, I'm not giving investment advice. I'm not an investment advisor. I'm not qualified to do anything other than help you get to sleep by boring you to death. So that's what these are for. So just have to say that. Don't have to say it. I choose to say it. So this one was 3 weeks tight here. And then on January 10th, it broke out of that. So let's go there. January 10th. Get to know and love your change date up here. It's the best feature in any program, including this one. So we're going to zoom in here. You can see there's lots of 3 weeks tight in this one all over the place. It's kind of hard when it's in the base and you hover over it. It's temperamental and doesn't always show it to you, but outside the base it does. Because when you're hovering in it, it's telling you, the computer thinks you want to know what the base is, and it's telling you it's a first stage flat base. So anyways, here is your 3 weeks tight that you're recognizing on the weekly. And then you go over to the daily and you're saying, okay, well, where is your entry? You don't have an upside reversal, but it was starting over here. So in fact, let's go back 1 week. So before that broke out. So here's when you would recognize it. We're going on the weekly. It's 3 weeks tight. Now you're running your screens. You see it's 3 weeks tight. What do you do? So what I'm doing is I go over to the daily and I say, okay, well, where is an area of resistance? Sure, the 644.97 is an area of resistance, but that's way up there. Do I really want to wait for that? No, I don't. I want to look for a prior resistance area. So since we don't have an upside reversal, I'm just going to use kind of a little downtrend from this node here to this node and say, once it penetrates that, I'm going to start buying. So right there, start buying, and then adding to it there and adding to it there. That's how I would approach this one. Now, then if it comes back in, then I would just back out of that trade. You don't have to wait for it to go down 7%. If you're using this, use whatever risk works for you. But for me, there's that thought process of the quick and the dead, and to back out of it as quickly as possible. If it's not working, you can always buy back. So let's go again. This is what it looked like on the weekly. We're going to go through this one day at a time. So boom, right there. You're buying all of them because all three transactions, one as it's going through that, one as it's going through that, and one as it's going through there. And then I would start putting my stops on pretty much at the 21 day and the low there. And let's just see how that played out. And we know by the chart that it didn't work out, but let's just see. But at least it gets you out of the starting gate there. Now it's coming back in and it's breaking your 21 day. So probably not going to give it much room after that. I think you get the picture there. It just really wasn't really matching your expectations. If you love the stock, you could always hold it. But me, if I'm in it and I'm not really making much progress, I just look at it as kind of money at risk. If it was a standard pivot, that would be a little bit different. Let's just go out to the end of the month, see how it played out. Yeah, and see it just kind of died on the vine. So for you, you look at this and say, okay, where would your stop be? And if your stop was 7% below what you paid for it, nothing wrong with that. And let's just go back to where it was today. So you can see that was right there. It just looks so different to me. Man, it's been a long day. Okay, so that's where you find it with the growth 250. Let's look at one more. Here's Schwab. So this one is, I thought it was showing up as 3 weeks tight. Sometimes you have to toggle over to have it show back up. Okay, there it is. Okay, so 3 weeks tight in here. And what I'd be doing with this one is saying, okay, I recognize that it was 3 weeks tight, probably over that area, be nibbling, over this area nibbling, over this area nibbling, and over the old high. So it's another way of saying it doesn't have to be an all or nothing type of thing. And then if it goes underneath there, I'm just going to be backing away from that, just saying that trade didn't work out. Now I trade actively. If you're not that active, nothing wrong with that. But this 3 weeks tight is more for people who are active. Now this is for the ones within the growth 250, and that's the easiest way to do it. Now, let's say you just wanted to look at everything. Let me close those reports, and I'm going to go down into stocks. And I'm going to go into all tight areas, which is right here under the RS line blue dot. And you can see that, boy, we've got the phone book here, 1,356 stocks. And it tells you the event date in here of when that happened. So that's a lot to go. That's a lot to go through. And a lot of these are going to be ones that you don't really, care for. And let's go back and see what the oldest one is on this one. So this goes back to May 30th. So what I would do whenever I have a big list like this, you can either export it to Excel, do some work with it in there if that's your comfort zone. Or for most people, I'm just going to copy this and I'm going to dump it into, I have a dump here research list that I just, whenever I'm doing something like this, so I'm just going to click on there, scroll all the way up to the top. I click again. So now I've highlighted this whole thing. I'm going to drop them all into the dump research here. Now, unfortunately, that info that we have on here is not going to carry over. That's just not how it's currently set up. So the weekly pivot and all this cool data in here, the event date isn't going to port over to this, but what it does allow you to do is then filter it down from there. So from there, what I would do is I'm going to sort it by, and this is the column set that I like to have. I'm going to minimize the company name, and I'm just going to get rid of all the thin things. So here I'm sorting it by dollar volume. I do not use share volume. I just use dollar volume. Let's just scroll down and get rid of anything less than $75 million volume. There's going to be a lot of scrolling. It's going to get rid of a lot of junk. Let's see. And if 75 is too high for you, then I would go to 25. Those are kind of my two go-to places for IBD Swing Trader, which I run with Justin. We have our threshold at $75 million volume. So now that brought it down to 505 stocks. So what is a few other things I can do on here? You know what? Let's sort it by composite rating. And let's just get rid of the ones that are under, let's use Bill's favorite composite rating. And that was 88. And yes, I did design the composite rating as well. And that was actually Bill's favorite indicator or favorite rating. And his threshold was 88 that he liked on that. So, and I do have a Webby Rambles on how and why I created the IBD's composite rating. So I'm highlighting that and I'm just right clicking and hitting delete. So now we're down to 110 names, and yeah, that's good enough. And let's sort this by a high ATR, because it's weird for a stock with a high ATR to be tight. It's much easier. And average true range is what ATR is how much it fluctuates in any given day. So if you look at like GD, right? So General Dynamics, this one only travels 1.1% on average over the last, on any day over the last 21 days. So with that one, you can see just by the nature of it being so tight and the fact that when I designed this, I base it off of percent instead of ATRs, that you're going to have a lot of blue areas in there. So it doesn't really mean the same thing. Whereas if you have something that's a high ATR, like this BE that has, very high ATR, 7.8, most people shouldn't buy things with a higher than an 8 ATR. In fact, even anything higher than a 4 is taking on a substantial amount of risk. It's more meaningful. So you've got it down in here in this ugly looking base where you had 3 weeks tight. And let's just go over there. So that happened on June 27th. So let's go there and see how this could have helped you. So it's 3 weeks tight. It's an ugly chart, but it's telling you it's starting to tighten up. This is another way of there's lots of ways of looking at things tightening up. And this is just one of them. And so it's 3 weeks tight in there. Let's go to the daily. Then you would look and see, okay, well, where is an entry point? And so right now an entry point would be like something over there or something above that. So let's just go one day at a time. Boom, it just gaps up. So if you were looking at this and you knew the story and you wanted to buy it, that would be your entry. And then I would say the low of this day would be my exit. Let's just see how that played out. Came right down in there, and that would have stopped me out, frankly. And this is a wild one. And then I would have bought it back there. So you have to know yourself. Whenever you look at a chart, and I know this is a targeted one, but I just got to say this. Whenever you look at a chart, you should always be thinking, what would I do? So I would buy it on this day, sell it on this day, and I'd buy it back this day. And I just know that instantly, that I don't even have to think about it, but my mind is going there. And that's what you want to train yourself to. So when you're in the battlefield, you just can just react. It doesn't mean you're going to be right. Buying it up there and selling it there, well, that was a loss. It was a big loss. But at least I know where I'm going to stop myself out. Now, someone could have legitimately said, okay, they're going to wait for it to close underneath that level to really tell you that it's failed. Nothing wrong with that. It just means you're going to take a bigger loss, but you're not going to be shaken out as much. So it's really a personal preference. So let's just go forward a couple days. And there it just keeps going. And this is a wild one. So let's go to the current date. And wow, it just kept going. Let's see from the weekly chart. So it went from here all the way up here. That would have been really hard to hold. A notice writing type of thing. Hard to handle. So let's find another one in here. Okay, here is this PI, which was tight down in there. Let's see if we can find something better. Ooh, this is a little bit more normal. Okay, so CLS, and then we're going to go to 725. Oops. Thought it said 720. Oh, wrong month. Okay, so 3 weeks tight in here and it broke out there. So again, you would have been recognizing it on here on 318. So on this week, you had 3 weeks tight. Big move up, holding in tight, almost unchanged, just up 1.1% that week and down 0.57 that week. And now let's go to the daily and see where our entry point would have been. And would have been like maybe you bought some over here, and you're looking to pyramid, or maybe you just missed it, or you bought it and you've locked in your gains and you're looking to get back into it. So what I would be doing is saying, okay, if it could pass above that, I'm going to go ahead and buy it. And so let's go one day at a time. Yeah, it's pretty much there. I think I'd start buying some there, but not much because it's not clearly, like it wouldn't surprise you if just the next day it went in there. That wouldn't be unusual at all. So I might just nibble to do big purchase. Oh, and that's exactly what it did. So, but since it was a nibble and it's not really a material close below that, I would still hold those and then probably use my 21 day, the green line, as my stop, or probably this line there as the stop for those shares. Okay. So if I did sell any here, which hopefully I didn't, I would just buy those back right there because that's what normal action is. And a little mini downside reversal, but it's moving up and it's up and out of there. And so that is, let's just go back to today. And I was buying it out of here. So, and again, you can do that with, all of these in here. As a reminder to find this, you go into the reports, go into the pattern rec portion of the growth 250, go down into, the tight areas. Then if you want to look at stuff outside the growth 250, you can go down into here and just go to all tight areas under stocks and then technicals and then all tight areas, and then just take this and dump it into Excel. Like if you wanted to mess with like my pattern rec stuff in here, like you want to look for a certain type of base, like let's say you wanted to study IPO bases or flat bases or what have you, you can just dump this in Excel, mess with it, and then import it back into the market search. Just copy those symbols and paste them in there. So with that said, wow, a little bit longer than I was hoping for, 35 minutes, but not too bad. It's in the right ballpark. So we will do more of these episodes. Again, let me know in the comments of other targeted episodes that you want, as well as full length. I'm not getting away from the full lengths. I've got a lot of travel between now and the end of the year. I'm doing several workshops that I'm going to be doing in person. I'm going to be September, September 27th and 28th, the San Francisco meetup group is going to be doing where a lot of great speakers are going to be talking, and I'm going to be the bad speaker. That I'll be doing an in-person talk there. I don't know what they're charging, and that should be a really fun weekend. If you can't make it there, they're doing it, online as well. So just go to my Twitter handle. Webster 1971, and I've posted something from Hans, who is the meetup coordinator there, and so he'll have all the info and everything. So I'm really looking forward to seeing everybody, and Charles is going to be there. I haven't seen him in forever, so that's going to be a ton of fun. I think he's going to be doing some stuff on Sunday, maybe a question and answer or something like that. Then what I'm really excited about is on October 4th in Vegas at the Venetian, IBD is putting on the Founders event and Founders Club event. And for any of those members there, I'll be speaking with Charles. At least that's a current plan. It's always in flux. I'm not really doing a full presentation. I'm just doing a kind of an interview. Arusha is going to interview Charles and I. At least that's what the current plan is. And I'm really looking forward to that. That's going to be so much fun. And you never know what comes out of that. That'll be great. And then a couple weekends after that, if you're on the East Coast in Florida on the 18th, I'm going to be speaking at Matt Caruso's workshop that he's putting on with a colleague of his. And Jason Shapiro is going to be talking on Sunday. So, man, dude, he's a real market wizard. I cannot wait to. And I did a podcast. He was nice enough to have me on his podcast. And that guy is so smart, such a cool dude. So, looking forward to just seeing him give his presentation. That should be a lot of fun. So, I'm actually going to be out and about, and I've got a lot of family travel and stuff. So, that's a long way of saying I've got to do a bunch of these short ones ahead of time, have them in the can, because my goal is to put one out every Saturday. And it's really hard to record a bunch of 3-hour ones with my work schedule, which is heavy. So I'm going to do a bunch of these. Let me know what your topics you want me to go over. I'm happy to do them. Also going to start doing maybe a separate Ask Me Anything one, or I might combine it with this where just either put the questions on my Twitter, or really probably it's easier to just put them in on the YouTube comments. Just put AMA and then whatever you want to ask me. Now, some things that for non-disclosure agreements and stuff I can't talk about, but as long as I can talk about it, I'll be happy to. And just ask away, and I might just do one and just do a bunch of questions at once, or I might just pick one or two at a time per episode to go through. And I'm still going to do the big episodes, and I'm really looking forward to. I've got some really cool guests that I've just got to figure out, some that aren't really stock related, that I'm really, really like. One is going to blow your mind when you hear this story. So we've got to just arrange recording that. And then I've got some friends and some other people that I really admire that I'm going to do the Hangout series with. So a lot of Webby rambles on to keep going with, but I'm going to do a bunch of these basics, which I'm trying to keep it under 30 minutes, and shoot, this is 40 minutes. So I'm going to let the AI cut some of the fluff out, try to get this down. So with that said, remember, every episode, your tuition is to go and be kind to another person or animals or insects. Very important. Just life is life. Help something or someone out, and that is your tuition. And with that said, peace out.